Our analysis should begin the moment we see that on the weekly time frame the price is approaching an important area. So here we are on the Sun Pharma's weekly chart. We see that the candlestick has arrived at an important level, at an important support. So this is where we start looking at the chart. Now let us analyze the monthly first. In the monthly time frame, what do we see? A nice downtrend. The price is below the EMA. So there is a clear bearish view. Nothing bullish. Let us go to the weekly now. In the weekly, what do we see? We see that the price is coming from a downtrend, and now the price is kind of in a zone. It is in a sideways kind of a moment, but more of a downtrend. The price is also below the 50 EMA. Let us look at the recent candlestick. You can see this candlestick, it is a perfect RC. That is, it is a perfect rejecting candle. The wick is sticking out, rejecting the support, and the price has come back where it was. So it is a beautiful rejecting candle. Do we have squeezing candles? No, we do not have squeezing candles. Just we have a rejecting candle, and that is not enough for us to go long. Let us look at the daily chart. In the daily, again we see a nice downtrend. There is nothing bullish here. Let me draw a trend line. If you look at the candlesticks, we have some good candlesticks. This red candle is rejecting the support. Again, this green candle has formed immediately after it. It means that the support is holding itself, but there is no clear confirmation of bullishness. Let us look at the 75 minutes time frame. Again here we see a nice downtrend, but recently the trend is little bit messed up. We do not see a clear downtrend. In fact, we are seeing a sideways kind of a movement from the 75 minutes. It means that the downtrend, which was so strong earlier, is now a little messed up because of the impact of this support. Because the price is arriving at a support, this downtrend, which was a good downtrend, has now got little messed up, and the price has shown a little sideways movement. Again, if you observe, we are seeing a kind of a inverse head and shoulders pattern in the making. This is your left shoulder, this is your head, and this is your right shoulder. Let us draw a neckline. So this is the neckline. Once the price breaks this neckline, we can expect an up move. That is only solely basis on the basis of this 75 minutes time frame, not the other time frames. We are seeing the pattern in the 75 minutes time frame, so we make conclusions only for the 75 minutes. And remember, we never trade just based on the patterns. We need to see the overall market picture. Now let us go to the daily. As you can see in this chart, we are not getting clear bullish indications from all the time frames. So we will wait and watch what happens next to see if any entry is presented. The weekly is a little messed up. There is no clear indication from the weekly except the rejecting candle. Just based on the rejecting candle, we cannot make a trade. The trend in the weekly is bearish, the monthly is bearish, so we want some sort of good indications from the weekly. Let us move forward. Let us complete the week. Now we get the next 5 days, and this makes up for the next week. The trend line is broken with this candle, and then we are seeing these smaller bodied candles, not much confirmations. Smaller bodies means not much bullishness, not much strength in the move. So again, no confirmations from the daily time frame, no hardcore confirmations from the daily time frames. This is an average confirmation, the trend line break with a nominal candle, and following candles are looking average. Now we are on the weekly chart. Now you see an important candle has formed. This is a covering candle, that is CC. The body of this candle is good, bigger than the previous body. So this gives us an additional boost that yes, now indeed the price is willing to move upwards. Let us now go to the 75 minutes time frame to see if there's anything. Now in the 75 minutes, this neckline got broken, plus the 50 EMA got broken, and the daily trend line got broken with a big bodied green candle. Now this gives us a very good indication of a possible up move. So if you are an aggressive trader who likes to use 75 minutes time frame, you can take a long entry here because this candle is a beautiful candle. There are multiple confluxes, so you can take a long entry here with a stop loss just below the right shoulder and a 1:1 target. But as of now, we are not taking an entry. We are acting as a conservative trader. We want perfect entries. So we are ignoring the 75 minutes confirmation as of now. Let us go to the daily time frame. So now, forgetting the 75 minutes, if you look at the weekly, we have got this nice covering candle. We have got a possible indication that price is indeed going to move forward, move upwards. So from the daily, we will like to look for confirmation. Let us play. Let us go ahead, see what happens. Do we get any entry or not? Now we are looking for the break of this 50 EMA to give us an additional confirmation to take a long entry. Okay, let us move forward. Yes, now here we go. This is a beautiful candle. It has broken the 50 EMA with huge force, with huge power. So a safe trader, a conservative trader can go long, can buy this stock here with a stop loss at the support and a 1:1 target. Now let us define the position using the positioning tool. I select the long position. We'll enter here with a stop loss at weekly support and a 1:1 target somewhere here. Now the issue with this trade is, if you look at the target, on the way we have a weekly resistance. This blue line represents the weekly resistance. Now as a conservative trader, I will not take this trade. Why? Because there is a big resistance coming on my way before the targets. So it is very much possible that the price can move till here, and from this point it gets rejected and starts moving down. I do not want to risk this, so I will skip this trade. However, let us see what happens next. The price goes up, comes down, gives a pullback, and it moves up, and your target is achieved here within 15 days approximately. Yes, within 20 days, your target is hit here. But you can see that this blue line, this area of resistance has played its role, and the price has crossed it by a little bit and just started falling. So it would be a risky trade. As you can see, the target has been achieved just by a margin. Now if you are a little risky player, if you still do not want to miss this move, what you can do is, let me delete this first. Let us come back to this bar. When you saw that there is this big bullish momentum candle which has broken the 50 EMA, what you can do is you can take a long entry and place your stop loss at the latest swing low. How do you identify the swing low? Switch to the line chart. This is your latest swing low, so you can keep your stop loss here at this point and look for the targets with 1:1 ratio. As you can see, now your target is well within the range. This will be a little risky because it is possible that the price can give a down move and come back to the support and take out your stop loss before moving forwards. So this would be a little risky trade. Now let us look at the 75 minutes. In the 75 minutes, we thought of an entry here with this bar. Let us see if the targets are hit. We will go long at the close of this bar with a stop loss just below the right shoulder, that is here, and a good trade. If we are taking a risky trade, we need to have a risk reward ratio which is greater than 1. So generally on my risky trades, I like to keep 1:1.5. So here we go. Risk reward ratio is set to 1.5. So you are risking 13 rupees to get 20 rupees and your target is comfortably hit. But this trade would be for a risky player. Now what I recommend is, as a beginner, you must go for the daily charts. You can use the 75 minutes for additional confirmations, but do not use them for an entry. Do not place more emphasis on the 75 minutes time frame. Now I am in the markets for a long time, so I can pretty much ensure that the 75 minutes works well for me, but it cannot be the case for you if you are a beginner. So initially try to use the monthly, weekly, daily charts. Most probably you will end up booking profits. Do not look for quick entries using the 75 minutes, as you can get caught up very early. So I hope now you are understanding how do we analyze the charts, how do we like to have time frames confluxes. We like to have multiple indications giving us the same thing, giving us the same bias, and then we will like to enter. The important key is patience. You see, how much do I wait for each candle to show up and tell us where the market is going? It is only when I get perfect confirmations, only then I would like to enter a trade. It is only in this way you can get a high probability trades. So we are learning a discretionary method of trading. Discretionary means it differs from trader to trader. You may analyze a chart in a different way than I do. You may like to enter in a different way than I do. You may like to set your stop loss at a different level than I do. I am just giving you a good foundation on how to analyze the charts. Now it is up to you to make efforts and to practice, look at the charts and try to interpret it in the right way. Thanks for watching. Goodbye.